All right, let's get started. Welcome, everyone. It's great to see some returning names of the attendees. Back for more, are you? That's awesome. So thank you to everyone who is coming for round two of this three-course meal we at MyFly have prepared for you. Before we begin, I want to thank one more time our fantastic guest speakers from yesterday, Pedro Zorilla, former co-CEO of the Mexican Stock Exchange, Francisco Quintana, principal at LIP Ventures Boutique, and Caden Sisk, a fundraising consultant for startups. They all put so much thought and care behind their responses, and we were so lucky to learn from them. Of course, we really appreciate you, the audience, for your time and for your passion for learning. Lastly, for those of you here who weren't able to join us yesterday, this is the format of the webinar. So our moderators are going to pose questions on a certain topic, and then the guest speakers will have approximately 5 minutes to respond. And then once all three panelists have responded, we'll move on to the next topic. And finally, we'll get to live Q&A. So with that, if you give me one moment, I will pass it on to a student I think many of you in the audience will recognize. Alrighty, take it away, Santiago.
Yep. Hello, my name is Santiago Paredes. I'm a student in ASF currently. For those who are in ASF, thank you for joining us. And for the last couple of months, I've been a member of MyFly. I've been proud to be a member of MyFly. I believe it's a remarkable organization that's looking to teach the youth finance. And yeah, very proud to be here. Just one thing, be sure to stick around during the break to hear about an exciting new startup called ESML. And without further ado, I pass it to my dear partner in MyFly, Patricio Vargas.
Yeah, thank you, Santiago. It's great to see so many people attending today. As you know, today is day 2 of this 3-day conference, and today we will be exploring the fascinating world of private equity. We're very lucky to have 3 seasoned professionals sharing their wisdom with us today. Our first speaker is Hiroshi Ito. Mr. Ito currently works as the president of engagement at a Japanese-focused activity hedge fund. With a total professional work experience of over 32 years in the investment banking and asset management industry in Asia and Japan, Mr. Ito will provide valuable insights and lessons he has worked hard to learn. Prior to his current position, he was a director at the Bridgeford Group, a mergers and acquisitions advisory firm affiliated to the Mizuho Financial Group. Earlier in his career, Mr. Ito also worked for the Beacon Group Energy Funds, currently a part of JP Morgan Partners, a $1.6 billion private equity firm specializing in investments in the energy sector, and the Industrial Bank of Japan, where he accumulated over 7 years of project finance experience in Southeast Asia and other emerging markets. Mr. Ito received a BA in economics from Waseda University and an MBA from the Johnson School of Management at Cornell University. Mr. Ito is a native speaker of Japanese and professionally proficient in English. Nina, I'll hand it off to you to introduce the remaining speakers.
Hi, everyone. It's good to see you all again. Today, I'm happy to introduce Megan Chung. Megan is a private equity associate at Veritas Capital. Before working at Veritas Capital, Megan was a banking analyst at Credit Suisse, where she focused on structuring and executing leveraged buyouts, dividend recapitalization, and other debt financing. Megan holds a BA in economics with a concentration in value investing from UCLA. We are very fortunate to hear from her today. Next, I'm excited to introduce Sam Khoshbin. Sam is an associate at Ashler Capital, part of Citadel's equity hedge funds. His background includes work at Garrett Capital Management and Credit Suisse, focusing on LBO debt financing. Sam holds a BA in finance, summa cum laude from NYU Stern, so please join me in welcoming both of them to this virtual stage. The 5 central topics of the webinar are career path, role specifics, industrial overview, networking and mentorship, and some advice for young financial scholars. And lastly, we'll conclude with a Q&A from our audience. Feel free to type questions in our Q&A section at any time during this conference, and we'll get to them at the end. If it's speaker specific, make sure to add their name at the end of each question. So with that said, we have a quick lightning round question for all of you. How would you describe private equity? And we can start with Hiroshi.
Oh, Hiroshi, I believe you're on mute.
I guess the question is, how do I describe private equity? In simple terms, the market, when we see the market, it's divided into two: public equity, listed stocks, and private equity, where the stocks aren't listed. And I think when people use in our industry private equity, it means that you're trying to acquire a company that's not public, and acquire that company, make it better, and eventually list it, or you buy a company that's public, traded on the stock market, and through potentially a management buyout or a management employee buyout, use leverage and bring that company private, make the company better, and then list it again. In very simple terms.
Thank you. We can move to Megan.
I think if you think about private equity in a very simple layman's way of understanding it, it's like buying a house. When you buy a house, you take a mortgage out because you need to finance it with some cash out of your pocket and some debt out of a loan from a bank. And it's the same concept when you buy companies. You'll find a company, whether it's a small founder-owned business or a publicly traded company that you think will be a good investment that generates a lot of cash flow. You'll go raise financing for it. Usually, hopefully, that's more than half of the money that you need to buy the business. And then you hold it and you operationalize it. Maybe you do other acquisitions and clump it together with another company, and you hold that for around 5 years or longer. And then you go to sell it and hopefully make at least double the amount of cash that you put in on day one.
Thank you. And then lastly, we can move to Sam.
Yeah, thank you. I think Megan and Hiroshi both did a great job answering the question. So I'll just add a couple extra points on to the end. I think when people generally talk about private equity, they're oftentimes talking about doing LBOs. So the points I'd add on are you're generally using a high amount of leverage to increase the returns. Similar to Megan's example about buying a house. If you just bought it with your own dollars and it went up 10%, you might only make 10%. But if you buy it with your dollars plus a lot of leverage and the leverage doesn't return 10%, you can actually juice your returns up by doing that. The other point I would make is typically in private equity and how it's different than public markets, although not all the time, but typically you're doing it for a controlling stake. You're trying to own the business. You have a lot of say in how the business is run. And that generally gives you the opportunity to create a lot of value, either increasing the revenue of the business, the margins of the business, or the perceived value of the business by increasing its growth trajectory.
Thank you. We can move on to role specifics. So the next question is, what does a typical day in your role look like? And what are the most challenging and rewarding aspects of your job? And we can start with Megan.
Thanks, Nina. I think the most challenging and rewarding part of the job is very similar, and it's that no day really looks the same. Usually, so because I'm in private equity, we own certain companies, like Sam mentioned, we have a controlling stake, which means we get to drive what we think would be the levers for how to create value and ultimately sell the company for a higher price than we bought it for. So that means that you have to enact all of these strategic levers that you identified when you first bought the business. And that can range from maybe the company can buy something else that will open the doors to an adjacent market. And that means like maybe it's not the core competency of the company that you bought, but you can bundle a bunch of products or services together and present it to a customer in one pretty package. Or another strategic lever could be investing in certain products that the company doesn't have today, but maybe there's a part of the market that's growing really fast, and you need to invest a bunch of dollars through CapEx, which are capital expenditures. It's money that you put in to create something, to create a product or service. And if you do that, then maybe you can open the gates to a whole host of customers that you weren't previously servicing. So if you bifurcate my day, 2 buckets, one bucket is working on the portfolio companies, which are the investments that we currently have, the companies that we own, trying to make them better. That's one bucket. And then the second bucket is, of course, probably more exciting, which is working on new potential investments. When you look to buy a company, you go through probably 1 to 2 months, depending on your strategy, but 1 to 2 months of diligence. And that spans everything from trying to understand what the company actually does, why is it strategic to the ecosystem that it plays in, and then how big is the market that it plays in. If the market is really small and the company already is the biggest player, maybe they have somewhat of a monopoly on the market, then your opportunity within that market is already somewhat constrained because you're already buying the market leader. And that's where the adjacencies of opening into a tangential market really comes into play. And then part of working on new investments also means you're interacting with executives at potential companies that you want to acquire. A lot of the diligence calls that you'll do is with the company themselves. And so as a 26-year-old getting to interact with CEOs of massive public companies or CEOs of people who really built their businesses from the ground up is very rewarding. And I think when you're actually speaking to people where the company is their baby and they're trying to hand it off to someone that they can trust to help multiply growth for however many years, it becomes very personal. And I think sometimes when you work in finance and you're dealing with a lot of numbers, it's easy to get lost in trying to make the best return for yourself. But for a lot of the people that you interact with, it's a very personal decision, and the decisions that you make as an owner impacts thousands of people because they can have a 15,000 headcount of an employee base. So I think those are the 2 ways that I would describe my day. In general, I think one of the most challenging parts of the job is that you're often juggling both of those buckets at any given time. And so being able to manage your time, communicate with the rest of your deal team, and juggle any sideballs that come throughout the day is probably something that takes time, but also is what makes the job very unique and rewarding.
Thank you. We can move to Sam, and Sam actually works in hedge funds right now, but also has a past in private equity. So if you want, Sam, you can talk about both days and which ones you like better. Or
Yeah, I'll focus more on private equity for now, and we can maybe get some of the hedge fund stuff in Q&A, or maybe I give a brief overview, but I think Megan gave a great answer. I'll just kind of summarize, I think, some of the key points. I totally agree. It depends a lot on a day-to-day basis. A lot of it depends on whether you're working on one of your portfolio companies, whether you're looking at a new deal. I would say breaking down the new deal aspect of it in kind of 3 simple buckets is you're either screening for a new business where you're reading a SIM, which is a confidential information memorandum that an investment bank prepares, and you read it, you're trying to learn about the business. Maybe you take an introductory management presentation where you talk to them and understand what their business does. That's screening. You could look at 50 businesses in a year, maybe more. The next phase is when you're interested in something is diligence. So moving on from doing a preliminary screen, deciding whether you're interested, a less detailed financial model, starting to do diligence in private equity means you get absolutely unfettered access to all the company's documents and information, typically. That depends if you're buying a public business, maybe that's not the case, but especially for the private businesses, you get a lot of information. So your job is to digest that and make decisions based off of it. That's also where your financial modeling becomes much more detailed, and you figure out what price you're able to pay for the business and still generate a healthy return. So then after screening and diligence, I would say the third major bucket is execution. This is when you're dealing with a lot of your third parties, making sure that you've done financial diligence outside of kind of the diligence you do as a private equity firm, which is understanding how much you can pay. Also doing accounting diligence, you're doing legal diligence with lawyers, you're working with banks to provide leverage. And once you're able to do that, you should have a package in order to actually purchase the business. So that's kind of how I'd break that down. And then I guess rewarding and challenging parts, Nina, should I hit on that?
Sure.
Yeah, so I think definitely the most rewarding parts are probably you ultimately are just able to turn an idea into reality, right? Which is a really cool way to think about your career. And I'm skipping over, there's a lot of hard work involved, and 90% of the time, you might just be crunching numbers or grinding through information. Most of it is not relevant. You're spending a lot of time trying to figure out what is relevant and what is going to help you make your decision. But when you have an idea and you can see something very clearly and you can deploy hundreds of millions of dollars or less, it doesn't even really matter the amount. You could be deploying $10 of your own money, but doing it and watching your idea made manifest in the world and kind of being out there and being proven right, I think is a very rewarding experience. And then obviously the challenges that come with that are, it's an incredibly competitive industry. So it's not easy. You could give everyone the exact same information and you'll have an infinite number of answers for the same problem. And in order to be the best at it, you really need to look at the world in a different way. You need to be on top of all the information all the time. And that requires a lot of hard work. So I would say it's not just hard work, but people that are successful in the industry are going to be surrounded in an environment with other people like that. So typically good firms are very demanding environments. I'd say that's probably one of the biggest challenges. But if you enjoy what you're doing and you think that you'd enjoy finance, you can kind of look at a lot of those challenges and they can become fun for you.
Thank you. And then finally, we can move to Hiroshi.
Yeah, let me explain a little bit my company and what we do. My company name is Tayo Pacific Partners, and basically we're an activist fund. But we are very more of a friendly activist fund. And what that means is we invest in the public equity market, but we also have a team of consultants that basically meet with CEOs and provide them advice. And we make recommendations, and hopefully the presidents listen and incorporate our suggestions, and that will ultimately enhance the corporate value of the firm and will make money, the company becomes better. So we have about $3 billion invested in Japan and India. So as one of the partners and the president of engagement, my day is, every day is different because some days I'll be focused on marketing. We have, a live portfolio. What that means is that, every day, stock prices are moving. We have 50 people in the company. We have 30 people on the investment side. So on a daily basis, we're monitoring stock movements and also, chasing quarterly returns, readjusting the portfolio as well. And some days, basically, I'm spending a lot of time. I would say that when you're working with one of the smartest people in the industry, it's like a zoo. As an asset manager, the only asset you have is people. So really, people, human management is a lot of time where I spend a lot of my time, sitting down and understanding, how to develop people's careers, where they want to go, where their passion is, and that really takes a lot of time because you really want to build a strong team. So that's what we do. And once again, my day varies every day. But the most, I would say, rewarding part of being in this industry is, once again, to be able to interact with, the smartest people in the industry, people that have different ideas. You learn so much every day. And as you build the team, you build like, it becomes like a family, right? Because our objective is to make companies better, and people that have the passion to do that in Japan and India come together. And once again, being able to work with, great people is very rewarding. Obviously, the challenge is exactly what Megan and Sam mentioned about, it's very competitive. And if I can make one advice, it's going to be very competitive, but I think being young and trying to be successful in the industry, try to find your differentiator, your niche, because I think in a long, when you're in the industry for 34 years, I think that becomes more important as you become older. What is your niche? What is your competitive advantage? Thanks.
Thank you. We can move to our next question about career path. Could you share a little bit about your career journey, how you got started and what led you to your current position? And how does your education prepare you for your career? And we can start with Sam.
Yeah, great. So I'll take that question just in chronological order. So obviously before I had a career, I went to school. I went to school at NYU Stern, which was a program at NYU focused on business. I knew kind of going into college that I did want to study business. I definitely knew that I wanted to be in New York City, which was a big attraction to me. Stern was a great program, not only in kind of taking the classes and courses that would prepare me for a career in finance, but also putting me around the type of people I needed to be around to understand what I wanted to do, and who were great mentors and friends along the way. So I got a good amount of preparation there. It also prepared me to do recruiting and put me on a lot of people's radars. By the time I was a sophomore, junior, I could talk to people a year or two older than me that had already recruited for jobs and did some of the things that I wanted to do. So talking to them was invaluable for me in figuring out what I wanted to do and how I could get my foot in the door at some of these places I wanted to work. I recruited my junior year for a junior summer position at an investment bank called Credit Suisse, now part of UBS. It was great. I loved my summer. I loved just learning about the industry. I think when you're just starting off your career, you think you learn a lot in school, and you do, but it really is not enough to prepare you for the job. And you end up learning so much on the job about financial modeling, what all these different players do. I always knew I wanted to be an investor. So investment banking for me was really more of a platform to recruit into a private equity or hedge fund role where you're actually a principal investor and managing the capital and deploying it yourself. Investment banking is more of an advisory role where you're helping people deploy capital, or you're maybe moving your capital around to provide leverage to those people. So you're giving them a loan for them to make an investment. But I knew that I wanted to focus on doing an investment for myself. So that was generally how my career has gone from school, investment banking. I did private equity for 2 years, and then now I actually work at a hedge fund. I switched from doing private markets investing to public markets investing. And kind of happy to talk more about any of that in particular, but I definitely think school helps and studying helps. I think more important is just kind of being around the right type of people and asking the right type of questions to figure out where you want to be, what you want to do. And like Hiroshi mentioned earlier, you are eventually going to have to figure out what your competitive advantage is, what's going to make you different, and how you're going to be good at something. I think talking to people as early on as you can, and you could do it in high school, you could do it in your first year of college, and figuring out what makes you tick is a really important part of kind of setting the trajectory for your career.
Thank you. We can move to Hiroshi.
Yeah, I'm going to be totally honest. When I graduated from college, I didn't know what to do. I didn't know what I wanted to do. So I think I took the easy way out, like, join a bank and try to learn, because at the time people told me if you join a bank, you get to meet, all these different, companies in different industries and you learn. So I took the easy path. That's how I started. And to this day, actually, I always wanted to be a doctor for various reasons. I didn't pursue that. I think I should have become a doctor, but I've been doing this for 33 years. So yeah, I'm gonna be totally honest. That's how I got into this industry, and I just kept on doing the same thing. But looking back, I personally, do I like crunching numbers? No, I hated it. Am I good at it? I could do it, right? But what I do enjoy the most is creating something new. The company I currently worked for at the time, it was like a venture fund. There was three people that started. I joined. I was the fourth one. It was a new concept. Activist investing in Japan and India was never even heard of. People would say, it's going to fail. Nobody's going to listen to you, and will never listen to your advice. But here we are, $3 billion, and we've bought Roland, which is a music company as well. That was through a private equity. So doing something new, joining something new was really interesting, and putting deals together was interesting. So I think that I think, to be honest about myself, I think I always like to challenge myself and create something new that nobody has done. So yeah. No, one last thing about education. I did go to Cornell, but being a banker in Japan, it doesn't matter if you have an MBA or not, right? But what happened was when I came to the United States and when I started to negotiate with bankers in New York, the first question they ask is, oh, which Ivy League school did you go to, right? And to me, that was like, okay, for us to be on the same level to negotiate, I felt that, oh, you needed an MBA. So that's why I went to get my MBA. I'm assuming that on this call, there's going to be a lot of students from around the world, if I understand it right. So for me at the time, getting a MBA from a US university was like a passport to do business in the United States, or doing business on a global scale. Did it help? Yes. But most of all, what really helped was the networking, the friends that I made at business school. I'm not sure if it's going to be worth paying, is it about $100,000 now? But definitely.
Or
What, really? Wow. Okay. So I'm not sure about the return on that, but something to consider. But that's why I went to business school. And that's probably the only reason I went to business school. Yeah.
Thank you. And then finally, we can move to Megan.
yeah, I did not go to an Ivy League. I did my undergrad at UCLA. But if I go back even farther than that, in high school, I had no idea what I wanted to even major in, let alone do as a full-time career. And I sort of took the safe approach of applying as business and econ majors at my various schools because I thought it would cast a wide enough net for me to figure out what I wanted to do. I ended up going to UCLA, which was a wonderful school. If any of you all have an opportunity to visit or go there, I had a blast. Unfortunately, it is a more liberal arts focused education. So in terms of whether or not my undergraduate classes helped me prepare for investment banking or now in private equity, not so much. I think what allowed me to ultimately land at Credit Suisse in New York for my investment banking role was because I was resourceful. I joined the right student organizations and networked a ton starting as early as my freshman year in order to set myself up to be able to compete with the kids that are at Wharton and NYU Stern and all the other more finance focused schools, especially if I wanted to get into New York. So I started interning pretty early on in my college years. My first internship was my freshman year at an M&A advisory firm. I did nothing technical. There was no modeling or anything like that, but it puts you in the right environment and around the right people and enables you to listen in on the right conversations so that the finance jargon becomes a little more familiar. And one internship sort of led to the other, and I did a couple investment banking roles during the quarter while I was a student. If you're lucky enough to be able to stack your classes on during half the week and intern part-time for the other half, I think it really shows that you're serious and you're willing to go the extra mile to try to learn if this career path is something that you'd actually be interested in post-graduation. Before my summer internship at CS, I interned at Wells Fargo in industrials and energy and power, and just trying to give myself exposure to a lot of different markets and industries. And then I did my 2 years in banking at CS. And similar to Sam, I didn't think that I wanted to be a career investment banker. If you're in a similar situation where you don't really know what your ultimate end goal is, even like for your 5-year plan out of college, the good thing about banking is it also buys you time to get training, learn the analytical skills that you get on the desk, whether you like it or not. And it buys you time to be able to figure out what the next thing will be that really gets you excited. And for me, going to a private equity firm It's called Veritas, and we work mostly with aerospace and defense companies, but also with education, technology, and healthcare. And in hindsight, going into a role like this was something that I never really anticipated, but it's been very exciting. And I think looking back at having been a freshman at UCLA, knocking on people's door to try to get me internships, and now working at a very successful private equity firm, it's all because you set yourself up to be able to be around the right people, and with like-minded people that are going to help propel you forward. Nothing is done solo. It's because of the people that you meet and people who invest in you and are willing to get you where you want to be.
Thank you. We can move to our final question from me. It's about industrial overview. What key skills and attributes do you believe are necessary to be successful in your industry? And we can start with Hiroshi.
Oh, wow. I think this is how I view it. Like when you're young, definitely you need to acquire the hard skills, right? Understanding valuation, running financial models, the DCF, and all that. You must have the hard skills. But as you get older, and I would say maybe a tipping point is like 35, as you have like a good, 10 to 15 years of experience under your belt, then you are in more of a managerial role. And you're in the role to convince CEOs, lead a team and put deals together, right? At that point, what really becomes interesting is your contacts, your network, right? Picking up the phone and talking to a consultant or a lawyer or whoever investment banker that that you can trust to basically put a whole team together to put a deal together. So where I'm going with this is that, yes, hard skills are really important. Definitely you need that, but do not forget that as you get older, your personal contacts is going to be your most precious assets. I always tell to my team is that when you're fired or let go or you transfer to a different company, the company cannot, there's only one thing the company cannot take away from you is your network and contact, because that's your asset and your relationship. So I think that is the most important. So please, cherish the people that you work around with. And I guess my last comment regarding this is that when you're really young, you're going to a meeting with your MD or your boss, right? And then you're basically quiet because your boss is doing all the talking, and you're like, oh, I want to make that presentation because I was the one that was up, all night making that. But don't worry, because when you get older, you're going to be in that position, and the people that you are interacting now are going to be the CEOs or very important people of your counterparty. So that's something that I just wanted to relate today.
Thank you. We can move to Megan.
I'll give you the more junior role perspective. I think the most important thing, at least on the surface, is probably being diligent and having a strong attention to detail. It's similar to when you're a student and you're reading over your essays and proofreading or checking over your math homework before you turn it in. It's a similar idea. You're making, maybe in banking or in private equity, you're making materials. Maybe it's a banker, like a pitch deck for a company that wants to sell itself, and they've engaged Credit Suisse to help sell their business. So you're making marketing materials that's going to get distributed to potential buyers. Or from the private equity perspective, maybe you're creating a diligence pack that cuts a bunch of analysis and data that the company provided to you, and you want to package it and present it so that you can ask the CEO or CFO diligence questions to help understand what's been going on with the business's historical trends. If you put something on a page that's going to go to a CEO or potential buyers, it needs to make sense. It needs to be clear and concise. The math needs to tie out. There can't be calculation errors or typos. Just trying your best to not make any careless mistakes. So being diligent. I think the second thing is being proactive. you're oftentimes in very lean deal teams. And what that means is usually there's like maybe one or, depending on the firm, but in my experience, one or two associates or analysts, which is the most junior person on the team, doing the number crunching and modeling. And then maybe there's a vice principal or a principal who is helping manage your third-party advisors. I think Sam mentioned this earlier. You usually will hire third parties, which can be like your market consultants like Bain, BCG, McKinsey, and your accountants, so like PwC, KPMGs of the world. And then really for anything else, for environmental diligence, legal diligence, you hire all these people and create like a small army to help you understand and turn over as many stones as possible for a company that you're potentially going to put millions of dollars into. So in short, you're managing a lot of people and there's a lot of balls in the air that you're juggling. And so when you're working with 5 or less core people on a deal team, everyone has to know what needs to come next. Otherwise, you really will be there throughout the night for weeks. And so being proactive, being able to proactively start on the next task, or think about, okay, what is my vice president or principal going to want to see from me? And being able to get a head start on that before you're explicitly asked will save everyone time and help with overall efficiency. And then the third thing, I think, especially in my role now, which is one of the most junior people on the deal team, you spend a lot of hours with your deal team and your firm in general. And so just like having a positive attitude when the going gets tough, when you've had consecutive late nights, or maybe you have to work on a weekend or a Friday night, like having a positive attitude and being a good team player, being reliable and available when you know that there's going to be work that needs to be done, maybe in an inconvenient time for you, like that makes the overall experience much more positive, because it creates great dynamics with your deal team, and then everyone's more efficient. You get the job done faster. It's a better outcome overall for everyone. And I think sometimes having a positive attitude trumps everything else. So keep that in mind.
Thank you. We can move to Sam finally.
Yeah, so I'd definitely reiterate both what Hiroshi and Megan said. I think technical skills are table stakes. Having a positive attitude is great. I'll speak in some generalities. I think in order to be good, and like they've already mentioned, things like hard work, being generally curious, asking the right questions, having a good level of ambition, those are table stakes. You're absolutely going to need all of those things if you want to do well in the industry. I would say to be great, you're really going to have kind of more tenacity. The industry will push you, whether you do banking, hedge funds, private equity, real estate. Finance is probably the most competitive sport in the world. Like, it is going to push you to your limits all the time. And whether or not your tenacity and kind of have the self-confidence to keep pushing yourself is going to be what sets you apart from others. I think another thing that differentiates people is actually being passionate about what you're doing. So many people will do this role because they think it's just what they should do. It's an easy thing to do. It makes a lot of money. They'll never be as good as the person who enjoys it, because that person has everything that they have and more. So if you're actually able to enjoy something that someone else might think is painful, you're going to beat them 9 times out of 10. So those are some of the things that I'd impress on you. I'd figure out if finance is something that you want to do, and if you want to do it, push yourself as hard as you can and set your expectations for yourself high. And a lot of things are going to be very opaque, and a lot of things are going to be, you're going to work 10 hours one day for something that gets thrown out the next, or you're going to spend 5 hours doing something that you realize could have taken 10 minutes. And that's just part of the process. And you need to embrace the fact that it's a career where you learn a lot and you get better exponentially. And that's one of the awesome parts about it. So that's what I'd say my general advice is. more particular advice, I would say on ramping up technical things and things that I wish I did in high school that I ended up doing in college or even later on, like while I was on the job. There's so many resources people have online now where you could basically, I would say you could become as good as an investment banker just perusing resources online. You need to start small and you need to do it in order. But just going on YouTube and watching people speak, watching great investors at the Sohn conference speak, watching people like Bill Ackman try to explain investing in under an hour speak, reading the Berkshire Hathaway annual letters, reading anything you can find or get your hands on online, start there. Then get a little bit more into accounting, then try reading a 10K, then try financially modeling, then try maybe buy a stock, or if you don't have any money, buy it with fake money. You can go on marketwatch.com and set up a portfolio for yourself. There are so many ways you can get engaged, read, watch, study, and actually start to practice before your role. Doing things like that at a younger age will set you up to be dramatically more successful. And ultimately you'll just be you're proving at a younger age that you're hungrier than the next guy, and that person is gonna win. And it'll be a great indication if it's something that you want to do or not. If it's something that you really don't like, don't do it. But if you like it, it's best to start early.
That's great. Thank you. These were all wonderful answers. I'm going to hand it off to Nicholas.
Well, thank you, speakers, for all those amazing answers. I'm sure everyone out there is learning a lot, but we don't want to give you an information overload. So in a moment, we'll take a break. But first, as promised, we have a special announcement from Dennis Sachs, MyFly's Senior Technology Director, regarding his startup, ESML. After that, we'll take a quick poll. So take it away, Dennis.
Hello, can you guys hear me?
Yep, we can hear you.
Okay. Hey, everybody. My name is Dennis Zaks. I am actually the founder and CEO of EasyML. It's a platform for integrating computer vision into apps. And we have recently launched and are looking for passionate students in high school and college who are looking for experience in marketing and sales. We're currently offering a product marketing internship opportunity, which will allow you to get real world experience with marketing and sales in the AI industry. If you're a student interested in building a career in marketing and want to learn more about the AI space, please fill out our internship application form that I will send in the chat, and we will reach out to you with the next steps. Thank you, MyFly, for giving me the opportunity to speak at this webinar. It has been a great time working with you guys, and I'm looking forward to working with other passionate students. Thank you.
Thank you very much, Dennis. All right, now I'm going to launch those polls, and we'll take a quick 4-minute break. See you all back soon. All right. Thank you very much, everybody. Hopefully, you are still there. Nobody's asleep. Okay, and now let's take a quick look at those poll results. All right, I just shared them. Hopefully everyone can, all the attendees can see that. And right now I'll hand it over to Tricio.
Thank you, Paul. Okay, welcome back everyone from the break. Hopefully you're still there, all awake and ready to learn some more. We have two more topics to address before we take questions submitted by you, the audience. The first is networking and mentorship, and then the second is advice for young financial scholars. So first, networking and mentorship. Our first question is, how important is networking in your field and what strategies would you suggest for effective networking? If Megan could first answer the question.
Sure, thanks. I think, as I mentioned, I went to UCLA, which does not have a pipeline into banking or finance by any shape or form. So networking was a huge component of getting my investment banking role. Less so when I transitioned from banking to private equity, which I can talk about, but I think my first foray into finance was really dependent on the people that I met during as early as my freshman year. I am lucky to be a female, which means I'm eligible for a lot of diversity programs. Any of the large investment banks, the bulge brackets, so like Goldman Sachs, Morgan Stanley, JP Morgan, Credit Suisse, UBS, all of those, they host a lot of diversity programs. And I found them just by Googling online, and you monitor them to see when their applications open. You apply, usually it involves submitting a resume, maybe a short essay, and maybe doing what's called a hire view, which is like a recorded video interview, where you basically tell them about your background and why you're interested in the program. And then a lot of those programs will fly you into New York, is where most of them are hosted. And you'll get to spend a day hearing from different professionals at the bank across groups. So investment banking, wealth management, even sales and trading. And you can kind of see for yourself what a day in the life is like if you were to work at a large investment bank. So I applied for those. I think the other component of networking is just like not only networking with industry professionals, like people who are in the job currently, but also networking with your peers while you're at school. When I was a freshman, I joined a finance student run organization, and a lot of those seniors had already recruited for their investment banking roles. And so they are really the perfect resource to tell you how to follow in their footsteps and get that big summer internship after your junior year to hopefully convert that into a full-time offer. And so networking within your undergraduate population was a huge component of being able to navigate what's a pretty rigid recruiting cycle into investment banking. After that, going from IB to private equity, that I feel like as you get older, the networking comes a little more naturally just because the nature of your job kind of evolves. When you're in banking, I was in the financial sponsors group, which means if you're in like a healthcare group, for example, which is what people conventionally think of investment banking, your clients are large healthcare firms. For financial sponsors, the only difference is our clients are private equity firms. So when I was at CS, I would see staffings come across from Veritas. If Veritas were interested in buying a company, they would go to Credit Suisse and say, hey, will you give us financing? And that would hit my desk as an investment banking analyst, and I would work on those deals. And so I got to interact with Veritas and other private equity professionals as part of my daily job, which of course made transitioning into private equity a little bit easier because there was some familiarity and familiar faces. I think now, even though I happy with my role. I'm still at Veritas and I plan to be there. I think networking becomes important not only to keep laterally or not even to keep progressing and get promoted in your current roles, but also because no job is done alone. If Veritas wants to buy a company, we can't do it by ourselves. We're hiring a bunch of advisors, like I mentioned, or we're hiring a bank to help give us buy-side advice. And so your network multiplies very quickly. And I think being able to maintain those relationships as natural as possible will help provide readily available resources at your fingertips whenever you need them.
Yeah, thank you so much. Okay, next up is Sam.
Thank you. My networking experience might have been a little bit more different. NYU did have a little bit more of a pipeline. So there were people you knew in clubs you knew you'd join if you wanted to get a role in investment banking. That said, it did not necessarily help you differentiate yourself by being part of those clubs, because each bank, just to preface, because I mean, I guess this is probably not super well understood. Megan and I, when we talk about a lot of these banks, there are large bulge bracket banks in New York, the ones you've probably heard of, like Morgan Stanley, Goldman, JP, BAML, and then the European ones like Barclays, Deutsche, UBS, Credit Suisse. There are thousands of investment banks, not like those are the 10 or 8 or 10 that people talk about, but there are thousands of small investment banks, people that are providing financial advice to help people buy and sell businesses. All of those can allow you to pursue a career in finance and get your foot in the door or learn a lot. The same is true for hedge funds. People talk about large hedge funds. There are thousands of hedge funds. All of them will allow you to kind of relay your view in your opinion on a particular stock or invest. It's the same is true for private equity firms. So how you approach networking kind of depends on where you want to be. The larger firms have more direct and more streamlined ways of recruiting people. The large investment banks have codified programs where they're pulling kids out of college, and they will have a list of schools that they target and say, every year JP Morgan needs to hire 20 kids for this office. They probably hire close to 1,000 globally, but they'll hire, for example, 50 kids for investment banking in New York City. 10 of them will go into M&A. Of those 10, they want one from 10 different schools. 6 of those will come from a list that they have, and they get them every single year. That's what we kind of consider a pipeline. 4 might be more of a grab bag, where they just get thousands of resumes and they need to pick the best 4 out of all of those resumes. If you're part of one of the schools that has a pipeline, the best thing to do is to talk to the person that has that job. So I went to NYU. I was in class with kids 2 years older than me that had the job at Credit Suisse that I wanted. So obviously a good thing to do is talk to them. And then when I was recruiting and they were actually on the job, and this is what happened to me, I had been getting coffee with the guy that actually was my first round interviewer for I'd known him for over a year. Like that's, I mean, it sounds serendipitous, but it wasn't. It was totally by design. I'd known a long time in advance. And if it wasn't that guy, you could try to make friends with anyone who has that role. That I do not think that's the case for the majority of people. I think whether it's serendipitous or you put in effort, it's not going to be like that for everyone. If you don't have that opportunity, you need to be more resourceful. You just need to attack the situation in any way that you can. If you don't know the person, you might have to go on LinkedIn. You might have to cold email people. You might have to cold message people. It's great if you know the person. It's great if they're your friend or you can talk to them, but oftentimes that won't be the case. And sometimes you have to cast a very wide net so that you can be of those 1,000 applicants, one of the 4 that's selected. And even me, I think I had great preparation and a lot of tools at my disposal to get a good role in finance. But I still submitted my resume to 20 different places. I got interviews at 4 of them, and I got offers from 2. So you really do kind of have to prepare as best you can. And I do think no matter what and how well prepared you are, you need to cast a pretty wide net. But I definitely think you need to be resourceful in the process. I think you need to be pretty tenacious. You can't give up. You will hear no or just more likely non-responsive answers from a lot of people you're trying to network with. You just kind of need to keep going and see past that.
Yeah, thank you so much. And finally, Hiroshi.
Yeah, I think part of the question is what strategy would you suggest? My advice would be networking, at least for me, try to keep it personal. Personally, I don't like to go to these big groups, clubs, and meet 100 people. Distribute your business cards, and you feel good that okay, you networked. For my personal career, that never really involved into anything for me personally. Networking to me is like, even let's say you get a job, your boss, your colleagues, your subordinates, your clients, keep those relationships very personal because nothing stays the same. What's going to happen is your boss is probably going to move to a different company. He might even think about spinning off or starting, or your friend from college might want to start a new VC, and he likes your expertise and wants you to join. So, through your career, things change, and those personal relationships really evolve into something. So that would be my recommendation, that on the daily basis, the people you interact with are probably your most important assets, and please cherish those relationships. Also, people, yes, finance is very competitive. You're going to get stressed out. You're going to be working around the clock. If you have a hobby now, stick with it. It could be anything. It could be golf, tennis, jazz, whatever it is. Because one, when you have a hobby, it relieves the stress. But if you maintain it, you're going to be surprised with the people that you might interact. You might bump into this old guy who plays the saxophone, and you find out he's the CEO of this company. And through jazz, he's like, hey, I want you to join the company, right? Things like that happen. It could be cooking or book reading or whatever it is. A lot of important people have hobbies, and through that, you might bump into somebody that will really change your entire career. So please cherish those relationships as well. So that would be my advice.
Yeah, that's wonderful. Okay, and moving on to the second question. Did you have a mentor or a role model that influenced your career? If so, how did they help you? And again, the same order. So Megan, if you could start.
Can you hear me?
Yeah.
Yeah. I think when I was in college, the biggest mentors, as I mentioned, are the people that were 2 or 3 years older than me. I really leveraged them to show me what I need to study, how I should best prepare, how to cold email somebody and what that even means, and how to make people want to give me the time of day to interview me or have an introductory call. So that was step one. As I got a little older and started interning a little bit, there was a man, his name is Scott Lindsay, and he was a vice chairman at Credit Suisse. And he was a crucial mentor to me because he really helped push me through and get the best group placement and opportunity when I was starting at CS. I think the best mentors are not necessarily the people who open doors for you or give you tangible professional opportunities, but they're the people that are willing to hear you out when you're contemplating certain decisions or guide you when there's so many things you can do to prepare for an interview. And the mentor will guide you on where to focus and how to present your story in a way that's interesting and intriguing to people. And I think that's where I got the most benefit. In addition to having my own mentors, I think for myself personally, I hope that I'm kind of am able to return the favor today. And that means like when people your age reach out because they're interested in finance or in Veritas, I like to be a resource to them because it's always nice to pay it forward when people do that for you when you're in a high school or college and trying to break into the industry. And I think like mentorship and networking goes hand in hand, because the way that mentorship is successful is if it's a mutual relationship. Oftentimes I'll get something out of taking a phone call with a fellow Bruin who's trying to get into banking. Like, it's satisfying for me and hopefully helpful to him or her. And I think having that mindset when you're trying to find a mentor, it's not a forced relationship. It's usually the best ones are as organic as possible. And when you're able to provide something back to that person, it doesn't have to be career oriented, just like making them feel satisfied in some way. I think that's when the mentorship becomes very real and long lasting.
Yeah, thank you. Sam?
Definitely. Some of the best mentors I've had have been at some of the internships I've had earlier on in my career before I even started investment banking. And definitely in terms of, I totally agree with Megan, it's always best when it's mutual. And it's also, you're more likely to be helped and be mentored if you can convince that person that you're a hard worker, that you want to do a good job. Obviously, if they can see some of themselves in you and that they think that you'd be good in the industry or a good fit at their organization, or that they can teach you something because you're willing to learn, that's a great way for a mentee to attract a mentor. And that's definitely how I've found it. It's not getting a job and getting your resume into a pool is one thing. Actually having a true relationship with somebody and getting good advice, it's definitely something that's more personal than that. And I've found it when you've worked for someone and actually prove that you're willing to do a good job for them, they're most likely to give you advice and help you out. It's also an inherent part of networking. Later on, those people, there's tons of ways they may be able to help you. And again, it doesn't need to be, like Megan said, a tangible job opportunity. It can just be advice or a new way about thinking of something. And in terms of role models, no, I mean, I think going in, I knew I wanted to do investing before I went into college. So obviously there were certain people that I aspired to be like, or things that they said that I liked. Like I read a lot about Warren Buffett. I read The Intelligent Investor. I did the things a lot of people that want to get into investing do. I wouldn't say that they were role models necessarily, and I would kind of shy away from that idea in general in finance. I think it's healthy to be a little bit cynical, and it's also healthy to try to be yourself in certain ways. If you try to be exactly like someone else in the industry, you'll probably fail because you're not that person, and you'll also probably fail because they've already done it. And I think in order to be successful, you need to have some sort of advantage. You need to have some sort of personal advantage, and you need to be unique. Otherwise, you'll be like everyone else, and you can compete, but you just won't be the best at it. So really, I would say that I don't have a lot of professional role models. The only role models in my life really are probably just more my parents in terms of hard work and work ethic. Otherwise, no. But I have had good mentors in finance.
Yeah, thank you. And finally, Hiroshi.
Yeah, I was just about to say the same thing as Sam. The reality is, when you join the workforce, you can't select your boss, right? It's not like college or high school. So I don't like this teacher, I'm going to take a different class. Hopefully, you will join a company where your boss is a great mentor, right? You learn a lot, equal basis and all that. But in many cases, well, not many cases, in some cases, your boss is not going to be your favorite person. And that's reality, right? But hopefully, and I think that as a strategy, observe, meaning you learn from that boss or learn from other bosses or your colleagues or subordinates, because there's so much to learn. And then even your subordinate is like, wow, that analysis, the way you approach that data or the way you present it, there's so much to learn. So I think when you're young, your job is to really observe and steal the best of everybody around you. And don't try to imitate anybody. Just become the best of everything you observe, because in 5-10 years, you're going to be in a different position managing people, right? And be that boss that you want to be. And what I tell my team members is that try to find your way, your approach, your style. That's probably the most important, right? You can never be better than somebody by imitating. And I think that's really the truth. So try to find your style, but you build that by observing and stealing from people around you. Thanks.
Yeah, totally. Thank you so much. And finally, to move on to our last topic, what advice, that is advice for young financial scholars. What advice do you have for someone interested in pursuing a career in your field? So first, could we start with Sam?
Yeah. And I would preface this again with, it kind of depends on how you define the field. If we're talking about finance, my advice would be, it can be whatever you want. So the first thing you should do is figure out what it is within finance you want to do. There are more opportunities than you could even imagine. You could do banking, consulting, hedge funds, private equity, real estate. There are jobs you can't even imagine that people have designed and that could be really interesting. And there are jobs that we haven't even imagined yet that you could create, and finance is constantly innovating. I would say if you're interested in a more traditional path, and I think the role I've done so far doing banking and private equity and hedge funds is more traditional. I would say at your age, the best thing you can do is prepare. And that's going to be reading more than your peers, studying more than your peers, watching more videos than your peers. And it's frankly, it's going to be doing things that other people are not doing, which is probably you're going to have to model. Like you'll have to learn technical skills, and that will really put you at a leg above everyone else. Even in my first year of banking, the fact that I just modeled by myself, literally alone in a room in an Excel spreadsheet, and there are plenty of first-year bankers that aren't that good at it. And if you can be good at that, it will really set up your career at a certain firm very well. And people will look at you and just think that you actually have drive and a purpose, and that you came there to do something. So if you start that in high school, I think you'll be well ahead of the curve. If you continue to do that through college and just continuously are a vacuum and learn everything you can about all these different industries, I think you'll find yourself very well prepared when you actually do start. And I've noticed some of the Q&A questions. I think we can kind of get into specifics later in terms of things to read and watch, but happy to address that when we get to Q&A.
Yeah, thank you so much. Yeah, I think those are great points. Next, Hiroshi.
I think Sam mentioned about this, but if you are really considering this this industry, investing actually in the market, or even creating a paper portfolio and getting a feel of what that means. How does interest rates impact your personal investment? How about currency? There's so much news, right, in the market, and does that stimulate your thinking, or does that change your investment thesis? Try to get some exposure, and if it's something that you like, maybe this is a career. But if you don't really like that, if it's not stimulating, maybe this is not for you. So I would start by, once again, trying to invest in the market. But if not, if you don't have the money, create a paper portfolio and see if you enjoy making money, and does it really upset when you lose a lot of money. That's where to start from.
Yeah, I guess nobody wants to lose money. Thank you. And finally, Megan.
Thanks. I think the best thing it's a funny question, because everyone on the phone is doing the right thing by listening to forums like this to try to educate yourselves on what opportunities exist and if what we're talking about is remotely interesting to you. I think to the extent that you're able to actually intern somewhere, that's really the best indication. Obviously, preparing yourself and looking online and all the things that Sam and Hiroshi mentioned are important, but actually being able to be at a desk, getting hands-on experience is priceless. And that doesn't mean interning at some fancy office or a large firm. Like it can be somewhere in your hometown, a small, like one other guy in the office or two people, like doing small scale deals. It really doesn't matter. It's just about getting exposure. I interned at a small place in Orange County, California, where I'm from, the summer after my freshman year, and did a lot of sourcing, which is you're screening the internet for potential investment opportunities. It's not glamorous or technical in any way, but you're starting to get a sense of the right mindset that you need as an investor. And it takes time to build that. Not everybody has investment acumen that forms overnight, or parents that are in finance where these terms and the right things to look for and consider when putting money into action, like some of those things don't come naturally, and it did not for me. And being able to be around it, even if I didn't always have an active role or understand what was going on, over time, everything becomes more familiar. And so when we just spoke about networking, if you can reach out through cold emails, which means like you've never spoken to the person before, but you got a hold of their email address and you send them a note expressing your interest and giving a little background about yourself, like being able to do that and have someone on the other end respond and give you an opportunity to either work with them or learn from them or speak to them. Like, I think that really helps put you and set you apart from the peers that you're competing with. The opportunities are really formed because you're chasing after them, and it's a numbers game. You have to reach out to a lot of people and find a lot of people on LinkedIn, and only a handful of those will get back to you. And I think if you can do that successfully and really put your best foot forward, it'll all pay off.
Thank you so much. And finally, for a final question, what steps should they take to best prepare themselves for a career in your industry? And are there any resources, books, courses, websites, etc., you would recommend to someone looking to learn more about your field? So again, Sam, if you could lead us off.
Sure. I'll answer the question directly, and you can obviously just Google and you'll probably get a bunch of good answers, but these are some of the resources that I've found really useful. One, I think it's a great place to start just reading good books about investing. The Intelligent Investor by Ben Graham is a great book. You don't need to read the whole thing. I would just read the chapters that are particularly around investing. The whole book is about finance in general. So it's, even if you don't want to be an investor, it's great to know. And even if you don't want to get in finance, it's important to know for personal investing. I would join the Value Investors Club online, which is a website started by Joel Greenblatt, who is the head of Gotham Capital. I would watch the video, Bill Ackman, Everything You Need to Know in Investing in Under an Hour. I would also probably read You Can Be a Stock Market Genius Too by Joel Greenblatt. There are really, just going on, you could get more detailed than that. I would start there. There are all these books online, security analysis, technical analysis, all these books, and you can learn absolutely anything you need to know about finance. But I would start there and move on. Another great website is Macabacus. If you want to learn about financial modeling, I'd go on Macabacus. It has tons of financial models. You can find free financial models online to download. And then I would also just go, like, people don't know this, but you can go on sec.gov and just see any business's financials, and just model them, read their 10Ks, read their 10Qs, just learn about the businesses. And once you see the free financial statements, you can turn that into a model, and it'll be an incredible learning experience for you. You can read their risks, the risks of the business, open up Apple's 10K and read about its risks. Any of those things, I think, would make you immensely more prepared than other kids your age. So I would start there.
Yeah, thank you so much. And if you could put like maybe the most important on all of them in the chat, that would really help us out. So thank you.
Sure, I'll start writing in the chat.
And next up, Hiroshi.
Yeah, in addition to all the books that Sam and Megan are going to mention about, my recommendation is it has nothing to do with finance. There's a book called Made to Stick. It's I think the author was Chip and Dan Heath. And in the book, basically what it says about some ideas stick and some don't. In investing, you can only look back at time and decide and determine if that investment was successful or not. But what really matters is all the analysis in your presentation when you go to the investment committee and make a pitch, right? So it's about presentation. And in the book, it talks about the success model, SUCCESS. But what it really is referring to is all your presentations should be simple, unexpected, concrete, credible, emotional story, right? Everything. When you report to your boss, when you bring it to the investment committee, when you talk to your colleagues or subordinate, everything's about presentation. So if you follow this model, you're going to be very good in the finance field. At the end of the day, it's about really persuasion. If you're good 51% of the time, you're going to be a really good investor. Our CEO says that if you can't pitch your grandma in 3 minutes while investing in this company, you're doing a bad job, right? So once again, to be successful in this industry, you might want to read the book Made to Stick and how to become a very good presenter. Thanks.
Yeah, thank you so much. And if you could also type it in the chat or send it to anyone, that would be greatly appreciated. Thank you. And finally, Megan.
They both rattled off a lot of resources, so I'll just add a couple. I think there are free ones online, and these are more like investment banking interview guides. There's one called the M&I guide. M&I, it stands for Mergers and Inquisitions. And if you Google that, there's a ton of free PDF resources of like Q&A technical interview questions. I use that. It's like kind of a baseline. Like if you're able to answer 75% of the questions on there, you're probably covered from a technical perspective for most investment banking interviews. So I highly recommend that one. I think in terms of just like overall preparation, I took a public speaking class my senior year of college, not because I wanted to. I think it was a last credit that I needed to satisfy, but I'm very glad that I did, because in any job, whether it's finance or on the opposite side of the spectrum and you're doing something more arts focused, being able to concisely and clearly convey a message to an audience or even one other person is extremely valuable. And I think when you're in high school and college, like being able to master public speaking doesn't take a lot of it doesn't take a lot of money. You don't even have to take a formal class. Just practicing, like if you were to do a TED Talk or raising your hand for opportunities in class to speak and present, like it's painful in the moment, but all that repetition really adds up. If you think about bringing it back to a private equity role, the way that most PE firms operate is you'll present your deal in front of an investment committee or IC. And the investment committee is usually comprised of 5 to 10 partners and partners of your firm, and you present the opportunity to them, the risks, the merits, the considerations, your thesis, what price you think you should pay, and you're explaining everything that you've worked on for months to 5 to 10 people that were not in the weeds with you. They probably are relatively unfamiliar with the details and inner workings of the company that you want them to buy. And so being able to, like Hiroshi said, be convincing, but also like package everything that you've learned over the course of your diligence to an audience that is less familiar to you, being able to do that clearly and confidently is extremely important.
Yeah, I totally agree. And thank you so much. Well, that concludes, and next is Paul.
Yeah, thank you so much for all those amazing resources. Okay, So now that we've gone through the predetermined questions made by MyFly, let's move on to questions from the audience. So if you remember, those of you in the audience, when you filled out the sign-up form, we promised that we would take the top 10 questions submitted by registrants and ask them live to our speakers. Yesterday, we asked 3 questions. Today, we're asking 4, leaving 3 final ones for tomorrow. So guest speakers, I'll announce the question in a second, but feel free to address whichever question or questions you feel most knowledgeable on. And well done to those of you who submitted these questions. Okay, first question. From a working professional's perspective, what is the biggest way a candidate can stand out from other applicants? Question number 2. What's the most unexpected trend you've observed in the financial sector in the past 5 years? Question number 3. Have there been any investment or finance books, movies significantly influenced your perspective or approach? I know we've kind of addressed this, but alternatively, you could answer the question, how accurate is The Wolf of Wall Street? And number 4, what are some common traits you find in leaders of successful companies you've invested in or know well? And how would you recommend young people to go about developing these skills? And in terms of order, anyone can go first, but Hiroshi, if you would like to, I'll leave it open to you, but if you'd like somebody else.
Yeah, and I think let me start off with the 4th one. Is the question of how to become a leader? Is that the question?
Yeah, common leadership attributes that you find in people.
Yeah, okay. I think a good leader is not scared of hiring and working with smarter people than you. A lot of people think that they could do everything. They don't want to delegate. But I think when you become a leader, it's almost impossible to do everything by yourself. And you need to hire good people, smarter people that are going to challenge you. And that makes the organization better, and that makes you better as a leader. So once again, a leader is not someone who's scared of hiring smarter people than himself or herself. That would be my answer.
Thank you very much. Sam, would you mind answering?
Sure. I'll just give short answers for all of them. I would say the best way you can stand out, especially when you're actually speaking with someone, is probably preparedness. Be prepared for anything you think they might ask. And I think going through some of the resources we just talked about are a good way to be prepared for interviews like that, especially Megan was talking about the M&I or the Vault Investment Banking Guide for questions. Those are great ways to be prepared. I would say, what's one of the most surprising financial trends? I think where the market is right now, I think we've actually kind of lived in a pretty incredible last 5 years when you think about it, and it's all within a time frame that everyone can remember on this call. But we lived through COVID, you've lived through the price of oil being negative in the world, you lived through interest rates from the Federal Reserve going from 5% to 0%, back up to 5% in a year, and the market's at one of its highest valuations of all time. With those high interest rates, I think that's kind of a pretty surprising trend, and the fact that we haven't had a financial recession in 15 years. I think I already gave all of the kind of books and resources off the top of my head. And then to the final question, just around good leaders that I've got to been able to be around and good CEOs been able to be around, I'd say the key differentiators for them is probably their focus on what they're doing and how passionate they are about what they're doing.
Thank you, Sam. Yeah, definitely. Don't always think about it, but we have everyone here on the call has lived through quite a few interesting things over the past couple of years. Okay, Megan, I'll leave it to you to answer some of those questions.
Thanks, Paul. I think the first question about how to stand out, for me personally, I think what's been the most beneficial is trying to elevate my role. I'm an associate. I've been at Veritas for a couple of years, but I'm still, the most junior man on the totem pole. And I think my goal every day is to try to take the role of the person more senior than me. If you can take something off their plate or be proactive, and if you feel confident enough, like you've had enough repetition working on deals, going through a diligence process, that you can anticipate what's coming next and what your vice president is going to ask you when you send him something. Like, I think that is really when you get noticed, if you're able to make someone else's life easier, especially being in a more junior role. In terms of what makes you a good leader and what I've noticed from being around CEOs of our different portfolio companies, I think Sam kind of mentioned this already, but being a passionate CEO and like allowing your workforce to drink the Kool-Aid, so to speak, of your corporate culture really makes your employee base feel invested and like they have a key role in whatever initiative or strategic lever you're trying to action. I think when we work on deals which are corporate carve-outs, and that means sometimes we'll buy a piece of a company rather than the whole business. And in those instances, it's like if you're in a friend group and you're only hanging out with a subset of that group, like developing a cohesive culture when you're breaking up a broader business is very challenging. And having a CEO that really makes your employees feel like they still work for a business with an identity, even though it's been broken apart, it shows in the way that the business actually performs financially.
Yeah, thank you. That's great advice. Yeah, definitely always more motivating when you can see kind of the impact that you're having. Well, okay, thank you for all those great answers and for those amazing resources. It's awesome that basically everyone here can just Google that and then learn a lot from everything you've recommended. So I just want to hand it over to Mehul to go over some of the live Q&A and encourage the audience. Don't be shy. If you have any questions, you can type them in the Q&A box. You can even send them anonymously, so feel free to do so.
So our first question is going to be, what are some of the potential ethical concerns or reputational risks associated with investment or investing? Yeah, anyone?
I'm happy to speak very generically about topics. I'm not sure exactly what that question's referring to, but I would say one area that investors have focused a lot on over the past 5 years, more with regard to ethics, is probably ESG investing. So making sure that they're investing in companies that are having a good impact on the environment, the society, or the government they're a part of. That could be anything from investing in companies that are trying to be carbon neutral, so trying to lessen their environmental impact on the world, or companies that have boards that are more diversified. I would say in general, that trend has become more prevalent in finance over the past 5 years.
Thank you. Follow-up question on ESG. How successful are investments that usually follow the pattern of ESG or prioritize ESG over other investment factors?
I'm speaking a little bit outside of my depth here, and people can kind of check online themselves. There are ESG index funds, so you can actually probably track this pretty easily by looking at an ESG index fund. I don't know any off the top of my head. My general understanding is that they've done very well during COVID and the past few years. And as the market corrected in 2022, they did less well. Most of these businesses were higher price earnings businesses that didn't necessarily generate a lot of cash flow. And as the market retreated, investors were a little bit less willing to invest in those businesses. That's also, it all depends on the time frame. A lot of those trends have reversed again in the past 6 months. Kind of, if you kind of just look at the NASDAQ as well, relative to the S&P, the NASDAQ was down over 30% in 2022, which is probably a good barometer for a lot of these other high price earnings ESG investments. It's now up closer to 30% in 2020, 2023. So the market can be very fickle. At the end of the day, I think what ESG investors are trying to do is maybe being a little less focused on just investing in what has the highest financial return and trying to invest in things that have a good societal return, things that might actually be good for society and not just dollars.
All right, thank you for that. Next question. What economic sectors are of special interest for investment bankers?
I can take that. Excuse me. There's like the main groups, which Sam mentioned earlier. There's M&A, which is more execution focused. So it's industry agnostic. You're working across all the different coverage groups. There's healthcare, technology, media, telecom, industrials, which covers everything from business services to aerospace and defense. I was in a group called financial sponsors, which is similar to M&A in that it's industry agnostic. So you're not focused on any particular subset of companies. You're just focused on giving them financing to buy their companies and investments. I think just to give you a lay of the land in terms of investment banking recruiting, typically you apply for the investment bank, and then as a second step, you get placed into your industry group, at least for the large bulge bracket banks. My approach when having to decide which group I wanted to go into was more a concern about deal flow. Like I wanted to join a group within CS that was very active. And some banks have strengths in certain industries more than others. And I would also say that choosing the industry that you want to focus in early in your career does not mean that you're stuck there. There are plenty of opportunities to pivot, and industry groups are often broad enough where anything that might fall under TMT can also be healthcare, which can also touch consumer health. And so everything kind of bleeds into each other.
All right, thank you. Next question. Do you think AI will take over your job? If so, how? And if not, why?
Let me try to take a crack at that. Yes and no. And I think it really depends on the strategy. If it's a totally quant strategy, yes, AI will probably take over. But for example, what I do, it's more of a consulting basis where you interact with people, right? A company ultimately is not just about numbers. It starts from the CEO with the passion and the decision he or she makes, right? The strategy, the transformation that's driven by people skills and people decisions. And my firm focuses on that, where we engage with people and try to provide the best advice. That cannot be, AI cannot take over that part of the investment. So once again, I think the answer would be yes and no, depending on the investment strategy.
Great, thank you. Next question is, how do you balance your social life with your working life? Anyone can take this question.
I think that's a tough question. Your capacity at work and your ability to balance your personal life and friends and outside relationships really ebbs and flows. Not every night is you're working till midnight. But sometimes you have to work weekends and sometimes you have to cancel plans. I think it's just about being flexible. Also, I think people in finance generally have an understanding that sometimes work comes up at inconvenient times. Most people who choose to go down this path do it because they want to be challenged. They work well under pressure and they thrive when they're juggling multiple deals and priorities, whether that's at work or outside of work at any given time. And so I think if you approach it with the right mindset that you signed up for this job, you think it's impactful and exciting, and it's ultimately something that you enjoy, then the challenge of having to balance your personal life with work becomes a little bit more palatable. And then I think on a more personal level, like having friendships and personal relationships that are meaningful and important to you, like you can always make time for those. And in general, if you put your best foot forward at work, then your supervisors, your boss, whoever will be understanding when you have personal conflicts that come up. And everything that you do on a daily basis in terms of doing good work, having a good attitude, being available, being a reliable team member, then like all of those things roll up to you having an easier overall personal life outside of the office.
All right, thank you so much. I think this will be our last question. If we get, oh, sorry, never mind. A few more came in. All right, next question. If we could get like a perspective from each speaker for this one. What affects an investment the most, either negatively or positively? Sam, did you want to start?
Sure. I'll just kind of take this in a little bit more of a technical approach, but I'd say probably the biggest things over the long term of what will affect a business is whether it's making more or less money. And that sounds pretty obvious, but that's the right answer. Being able to pick the right industry is actually going to be a very large indicator of whether you made a good investment over a long time horizon. Being part of an industry where the earnings are growing and paying an appropriate price for that is what's most important. And then kind of what I just said, the second part of that, making sure you're paying the right price for the business. I think an interesting kind of, Megan talked about much earlier how many private equity firms, they look to grow revenue to generate value in their LBOs over the course of investment. It's actually quite possible to make money in investing in shrinking businesses or bad businesses. It all just depends on how much you're willing to pay for them. People still very actively invest in whole businesses that they know are going to go away, that they know don't have a future outside of the next 20 years. But the coal businesses can be very cheap and yield plenty of dividends every single year. So they still may be a good investment. And the same is true vice versa for tech companies. Tech companies may make certain tech companies roll in cash. Certain tech companies make no money and you have to pay a very expensive price for them. But if 10 years from now, they've grown their earnings a huge degree, it could be a good investment. So it's about quantifying what you think they're going to earn in the future and how much you're going to pay for it.
Awesome. Did you, Megan, do you want to go next?
Sure. I think what makes an investment successful is when you can enact change within a business to make it more strategic to its customers. Sometimes that means creating a new product that's next gen in terms of technology. And I'm speaking sort of with the lens of how my investing experience has run, which is with a lot of aerospace and defense companies. But if you can create something or a service that feeds into the next set of missions or priorities for whatever customer it is, in my case, it's a government customer, but to anybody, then you're usually moving with the market in the right way. I think when investments go sour, there are many reasons. I think more qualitatively, it can be especially in leveraged buyouts, we're usually taking cost out, which means there are opportunities that we've identified within the business where they have maybe too many heads serving duplicative roles, or they've put a bunch of money behind something that's not going to generate much of a return. If you've identified those opportunities and your ability to actually take cost out of the business does not come to fruition, then maybe your cash flow runs tight and you can't make the interest payments on your debt. And then everything sort of becomes this domino effect where the whole business is struggling. You can't invest any more dollars because you can't afford it. Your lenders are unhappy because you're not making payments to them. And if all those things multiply and create sort of a perfect storm where a lot of things go wrong at once, then I think it can become very difficult to realize the return that you envisioned at the onset.
Awesome, thank you. And then Hiroshi, do you want to end this question?
Yeah, I'll keep it short. Obviously, finance 101, buy low, sell high. But I think you really need to focus on the entry. You make your returns at the entry point, meaning that if you're buying at a discount, that's where you make, I would say, the majority of your alpha or your returns, right? So what that means is that you need the valuation discipline. Just because everybody else is making money, it's a hot market, you want to get in, but have that valuation discipline where you know that it's the right entry point, because that's where you're going to make the money is I guess my take on that question. Thanks.
Great, thank you. I think we have time for a couple more questions. So can you identify any potential hidden assets or intellectual property that may not be fully utilized or monetized by the company? I think anyone could take this.
I'm happy to just speak on it generally. This is definitely not something that I do in the hedge fund role, but I would say more in the private equity role or an activist investing role. That's kind of your job, is to go into a business and create value. Sometimes it's not necessarily hidden per se, but it's about finding, I think Megan's talked about it a lot. It's about finding the right opportunities or something a company may already have in terms of intellectual property and using that to go out to new customers and generate revenue.
Yeah, great. Thank you. If you had to pinpoint one moment in your career, what would be a defining moment? If we could have actually all three guest speakers speak on this one.
I don't think I have one. My career has
It's
not
too
been defined.
early.
Yeah.
Too early.
Roshi, just wondering if you have something.
Yeah, I guess there's been several, but as I mentioned, my company took Roland Instruments. It's a digital guitar, synthesizer business. Hopefully, everybody knows about the company, but we took it private back in 2016. We relisted it on the Tokyo Stock Exchange in 2020. When it relisted, that was definitely a moment where it was very satisfying. The company, they only had like 2% operating margins at the time they listed, 15% operating margins. We made, 10 times cash on cash for our investors. A lot of the employees, over 100 people, had stock options. They made a lot of money. So that was one of those moments where it was a win-win deal for everybody. And I thought that was really fulfilling.
Awesome, thank you. Hiroshi, if you could take this question as well. What are the unique challenges and opportunities in private equity investing in emerging markets?
Oh, okay. Emerging markets, right? Well, one is liquidity, right? I mean, emerging markets usually means that the market doesn't have the depth of investors. So to relist a company, liquidity is a big issue. But I think in general, because I do invest in India, we've been, for lack of better words, we've been burnt because some of the promoters in India, you call the CS promoters, were not honest people, and there were a lot of fraud going on. The governance in general is totally different from that of in the United States, in Europe, and Japan. So you're dealing with a totally different country risk in emerging markets. And that's really the difficulty, because I guess when you do business in the United States, you don't doubt everybody, right? You're assuming that there's some ethics. In emerging markets, sometimes that lacks, and it's really difficult to predict that in advance. And that's a huge risk from, I guess, my personal experience.
Great, thank you. I think this will be our last question for today. If there are three things you could tell your younger self about being a financial investor, what would they be? Or three pieces of advice you would give your younger self? And yeah, if we have,
I'll go. I can keep my answer short. I feel like I'm not old enough to give my younger self too much advice. I think the one thing would just be to read more like daily news. If you can subscribe to the Wall Street Journal or something similar, there's another free resource called the Morning Brew, which is just a daily email. It's like kind of witty and funny, and it just summarizes some trends in the markets and business and like latest business news. But just to read those on a more regular basis and not have it be a chore because you're preparing for something, but just because it's good to keep up with daily events, especially what's going on with the markets and even on a more macro level. I think that's what I would say. And I would give that advice to myself today.
great. So the Sam or Hiroshi, do you want to
Yeah,
take?
I can say a couple things, and maybe not three, but in general, I wish I did everything that I've done just earlier. And I think it's great that I'm sure there are a lot of young people on this call. If you actually do kind of take advantage of some of this advice and do it at your age, you'll be at a real advantage. So I would try to do everything that you think you might end up doing in college or in your career now. I think that'll give you a huge advantage. And I think one thing in particular, and Hiroshi mentioned it earlier, but having a mock portfolio, just starting to invest in stocks, even if it's with $100 or doing it with paper money, it doesn't need to be real. And seeing, just having an idea, watching it play out, actually reading about the business and the economy and trying to understand what's going on in the world, I think it'll give you a really interesting perspective. And it's a muscle people end up not flexing until much later on in their life. So if you can do that at a young age, I think it'd be really great.
Yeah, Hiroshi, do you want to conclude?
Yeah,
today's
wow. I think we covered this, but it's a very competitive industry. It's very stressful. Some days you're gonna have to go back home after losing $10 million, right? But the next day you hope that you're gonna make the $20 million the next day, and you're gonna be in the positive area. So it's very stressful. But number two, this is something that people don't talk about. It's financially rewarding. Meaning if you're successful and good at it, you're going to be rewarded for that compared to any other industry. And I think a lot of people on this call have that in their mind, right? Or you wouldn't even be considering finance. So if you do it right, if you put in the hours, work hard, it could be very rewarding. And I think that's what everybody wants to hear. And I think that's the truth. Lastly, investing, right? Everybody on this call is going to have to invest their own pension money, right? Everybody's young. You don't think about that, but you are going to be an investor. Once you start working, you're going to have to put a little bit aside and, invest in your 401k, think about your pension, you get married to have kids and all that, right? You're going to have to grow your wealth. So everybody needs to be able to learn how to invest, improve their, investment literacy. Yes. So even though this might not be for you as a profession, always have that in mind that you need to be able to manage your own wealth and grow it. So everybody on this call is an investor. So I guess those are the 3 points.
Awesome, thank you. So to conclude, on behalf of MyFly and all the attendees, I want to extend our sincere gratitude to each of the guest speakers for taking the time to share your expertise and experiences. Your passion for the world of finance and your commitment to educating and guiding the next generation are commendable. To everyone in the audience, we hope you found today's discussion inspiring and educational. Please remember to join us tomorrow for day 3, where we'll dive into the captivating realms of wealth management and cryptocurrency, featuring 3 exceptional guest speakers who are experts in their fields. Santiago Varela, an economist from ITAM, and passionate Bitcoiner who turned his garage into a Bitcoin office where he teaches young adults about his revolutionary innovation. Lindsley Meldon, a certified blockchain professional and experienced business executive who currently teaches blockchain and cryptocurrency at Columbia University. And lastly, Uzman Hassan, a hedge fund analyst and former consultant for one of the top management consulting firms. Once again, thank you to Mr. Ito, Mrs. Chung, and Mr. Koshman, and thank you to all the attendees for being part of this fantastic conference. See you all tomorrow. as we continue our journey through the fantastic world of finance. Thank you.
Thank you.
Thank you.
Thank you.
Thank
very
you.
much to all our guest speakers and attendees.
Yeah, thank you very much.
Thank you.